Hey everybody, great to be back with you here. Mike Fairborn from Markets and Sectors. Folks, many of you may be listening to the FOMC meeting right now with Fed Chairman Powell. I was just listening to it myself to get some additional details for our discussion today. We've got that to talk about, as well as the market. We've seen a little bit of a volatile market day, some ups and downs. We're still up on the day, though, and there are some positives in terms of what the Fed is seeing with the market, but there's also some negatives that I'm going to point out as well. Of course, we always get both sides there, but welcome to all of you. Hello to you, each of you in the chat. We've got Riceberg, Life of the Fast Lane. Good day to all, as well as Oda. Joining the chat by a good friend and colleague of mine, Mr. Ben Watson, 20-plus year veteran in the markets, and really, how can we say it, a presenting guru. That's what I have to say. All the times that he's been on the road lately, not to mention all the work that he does here in the office. It's great to be on board with Ben. It's a privilege to have him here. Very knowledgeable resource, and thanks so much for being here, Ben. Hello to you, Chris B., Beth, as well as Scott. Good afternoon to each of you. And I did send out, by the way, you can follow Ben and I on X, Ben Watson CS, Mike Fairborn CS. You want to make sure that you put the CS at the end of those handles, those X handles, because we do get some imposters that have been showing up recently. But just a quick note on that. I did send out a recent CME Fed Watch, sort of an indication of what the probabilities are for a Fed hike. I'll put that in the chat just real quick. Oh, sorry. Well, there is my X handle, just so you can see it. If you want to click on that, you can check that out. That is there amongst some other things. Hello to you, Jay Richardson and Tatiana. Good to have you on board. Let's jump in and start off with some disclosures right now. Plenty to discuss for our session here. The information provided here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as sole means of investment research. The paper money software application is for educational purposes only as well. Now, investing does involve risk, including for some products more than your initial investment, that is. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. Some additional points there as it relates to futures and futures options trading listed right there. Also, past performance is no guarantee of future results or success. Wanted to also note, as we're going to look at it today, we did get a new Stacks read and wanted to state that historical data should not be used alone when making investment decisions. The Stacks is not a tradable index. In fact, the Stacks should not be used as an indicator or predictor of future client trading volume or financial performance at Schwab. Okay, so with that, let's get on with it, and let's start off actually first with the S&P 500, and then we can go from there. You can see over on the left-hand side, I've got a few of those lined up here to kind of take a look at what's been going on, but actually, let's go full screen. So here we are looking at the markets on a very interesting day in terms of where the S&P 500 is at, and the ES, folks, coming up to this big level of resistance. A couple of key points. You got a Fibonacci 61.8. You've got this long-term historical level that we've been talking about for at least a couple months now at the 5660. We came right up to that level. We were curious if we would. We had a couple areas of, like we said, longer-term resistance that was kind of anchored at that point, and we bounced off it. So we're really kind of watching and just seeing here what kind of a pullback we might get in the markets themselves. There were a couple of notes, I'm just going to name them off right now, that the Fed chair had mentioned. First off, Powell said tariffs are so far significantly bigger than expected. That could be used also, by the way, that's behind the scenes, that could be used as a negotiating tactic, is what the Trump administration has been mentioning about that. He said, for the time being, the Fed is well positioned to wait for clarity. Don't think we need to be in a hurry to adjust rates. And of course, you know, and I got notified early from Ben, all of us did. Ben let us know via our in-group that rates did come in unchanged. But again, you can take a look at some of those probabilities. If you want to click on that X link that I put in terms of my handle, I've got a link there for you. You can take a look at CME Fed Watch tool. Okay. And let's see, just a couple additional notes that were mentioned. It says tariffs economic impact is uncertain. The underlying, this is from Powell again, all these comments from Powell, the underlying inflation picture is good as it stands right now. So I didn't get a chance to listen to everything, just a portion of it, but I have a link on that on my X handle as well if you want to take a look at that. I think that there will be a recording there too. Okay, so a couple of quick notes as we're just looking at the SPX here. Since there are no changes initially, you can see up top, this is a great way to do it. Just go in, folks, and look at a shorter term time frame, 5-day, 5-minute. You can see exactly what would have happened. I'll clear off my previous notations. Around that time frame, the announcement came in right there at 12 o'clock. That is my time, that's Mountain Time, or 2 Eastern, 11 Pacific. You can see that we did see a sell-off bar, but then we recovered off of that sell-off bar, and we're basically back into our range right now that you'd seen. We did have a range previously, as I'm looking at the intraday, 5-day, 5-minute, of prior lows. We dipped a little bit lower there, didn't we? And then you can see the prior highs off that gap over here on the right-hand side. So that's really kind of our channel. And a lot of times what traders will look at is, do we move outside of that channel or below that channel after the Fed announcement? This can be really helpful to do on that shorter term basis. I'm on a 5-minute chart. You'd see the same thing on a 30-minute chart. You just wouldn't see as many data points that are listed here. Now, if I zoom back to the daily chart, what does this 5-minute bar, what does this 5-minute kind of downward move really look like? It's actually really quite mild relative to the upward move that we'd seen previously ahead of it. Let's go back over here. I'm just going to go back to our daily. So, let's go 6-month. So you can really see that. This could be positioning. We have to wait and see what it looks like. Kind of like a bullish flag type pattern right here. You're getting a couple of, right now, the markets aren't closed, but a couple of doji candles. The doji candles, again, battle between the bulls and the bears, and sometimes those can be reversal points at support. We'll see how that unfolds. A quick note, down below on the RSI, we are above the 50 level. All else equal, according to many traders, that's the positive. If you are below that 50, then it shows that positive, that there may be negative momentum if you're below that point. We've been above it for a little while now. As a matter of fact, we're above it ever since we began to break our prior high right there. This prior high right there. And a lot of times you'll see that. The short-term trend will oftentimes be up if you are above that 50, but that's a good gauge to take a look at. Now, as I mentioned in the swing trade class yesterday, that NDX, if we take a look at the NASDAQ now, is forming a very interesting type pattern, a price pattern that a lot of traders will actually look at. I followed it for a couple of decades now, and I've seen a number of big bottoms occur. I should say, longer term bottoms occur. Larger term reversals might be a better term than big bottoms, but bigger term reversals you could see prices come back up. We shall see on that, but it's part of this inverted potential head and shoulders pattern. Do you see it? It's a little bit more clear here on the NDX, the NASDAQ. And by the way, those tech stocks can be oftentimes, folks, first out of the gates when you start to see positive improvement in the economy. So I do know, and I noted also in terms of tariffs, at least from the administration perspective, Scott Bessent said yesterday that they're negotiating currently right now talks with 17 of the 18 key partners out there in terms of trading partners. So 17 of 18, and did say that that some of the conclusions in terms of the talks and the actual signing of the tariffs, actually putting it to paper, could occur as early as this week. Didn't name who they were or if it would be this week, but that was one of the comments that was noted by Scott Bessent. So we'll see what happens. It could be, though, that there is a little bit of time where there could be a little bit of a pullback here, where we may end up finding support along a shoulder, head, shoulder. And what you really want to look for here is the break above the neckline. Okay, so the neckline break, let's just use a Thinkorswim tool to make it very exact here, but something like right there. If you can break above that level, and we might continue to pull back, but that could signify an inverted head and shoulders pattern. And the retracement price of that would be the side of the, let's do this. I'm just going to go ahead and draw a line to represent this as well. So the peak here, down to the base, and then you take that same range, we'll just make it vertical. You take that same range as I right-click and duplicate, one way to do it, pull that up and just say, hey, if we were to break above that level, it puts us close to that 24,000 level. That's on the NDX, but if you did see this occur on the NDX, you might see also a similar pattern unfold on the S&P 500 index as well, the SPX. It just wasn't quite up to the peak here, so it might have actually a lower neckline drawn down here if in fact it were to go, something like this, and you still got the shoulder, head, shoulder. There could be a lower, I should say a downward sloping neckline, so you could get an early break here as well, if that were to be the case. But it is interesting because, again, we are looking at the S&P 500, approximately 500 companies there that are making up this combined pattern that we're seeing, which tells me that there's probably going to be a fair number of stocks within the S&P 500. They're going to look very familiar, or very much a price pattern that resembles that inverted head and shoulders, as well as the NASDAQ 100. Now let's take a look at the RUT right now. Welcome to all of you just joining us here. We're just kind of rolling through a couple of additional points as we look at it, but RUT even further away from the prior high and even a longer extension in terms of lower lows and lower highs. So what does that tell us? Well, there's risk in those small cap stocks. Always be careful with that. This trend hasn't really changed in terms of the longer downward trend. On a short-term basis, perhaps, yeah, but still you can see that longward sloping downward trend line still in effect there. Okay, I want to take a look at the VIX. The VIX can sometimes give us insight into, we'll go to a 1 year, into what perhaps the S&P 500 might be looking to do right now. It's positive for the market. There's an inverse correlation with the VIX relative to the, let's say, the S&P 500. The VIX doesn't stay up too long, does it? You can just see a number of these touch points. Once we hit, we come down, and a lot of times the higher that is, the quicker it can fall. There's the pullback here. If we're using this, and I like to do this sometimes because all this is really doing is referencing for us other volatile conditions in the market. What did the VIX do the last time? Well, it kind of went down and held flat for a while after it sold off, and then it stayed with these moderate spikes for a very, very long time. We don't know if that will happen again, but this portion of the pullback looks very, very familiar to what we saw, in August of last year. And so will we get these little spikes? Will it eventually start to come down? Because right now we're still at sort of an elevated level on the VIX. Historically, in fact, I'll even use a longer term. Perfect. I've got it actually set up on the chart. Let's just move it to the right on the weekly. So we look at a 10-year. You can see that after the COVID pandemic, or as that was unfolding, we still held about that 24 level. We're kind of where we're close to right now for a very long time. We've been here for a very short time, but even after that, we slid back down to this range of around 15 and then even lower to maybe 12, 12 and a half level too. So if that continues to dip and we start to see further weakness in the VIX, that can be some indication, according to, what the VIX is telling us here, kind of, what they're using in terms of that. It's a very large computer that tracks a lot of different data. But if that were to continue to break down, that could be construed as a positive for the market. While we're at it too, I want to do a quick view of the dollar as a reference point, and then we'll hit some markets and sectors, see what's moving in terms of individual sectors and some of the stocks too. So here is a look at the dollar. You can see we have been down for quite a bit. Gold and other, commodities have really been strengthened. The key point I wanted to show you here in terms of the dollar, which when you see a dollar declining, and if a dollar continues to dip, if it continues, we did break lower, but if we find resistance here and continue to dip, a lot of times what that can do is that can put upward pressure on asset classes across the board. Now, commodities are clearly an asset class, and they tend to be affected the most. But that would also include S&P 500 stocks, for example. Companies are an asset class. That's generally how it works with the dollar, but we'll see about that across a number of different asset classes. But there are some variations there as well. All right, let's see. What do we have here? Let me just check and see. Oh, just reposition that. Okay. Yeah, the RUT is doing better than the SPX and the NDX today. Sometimes the Russell itself will be in a position where it shows early strength or early weakness, and it is an interesting one to watch. Now, there is that resistance level that we're seeing right here, and that there is a longer term resistance point. So it'll be very interesting to see what we get at this level right here, right around that 2000 level. But if you start to see big spikes over here, it can be a harbinger in a sense of what you might find in the market, because small cap stocks are oftentimes more sensitive. And by the way, how is that going to play out with tariffs, for example? Okay, so it's interesting, but keeping an eye on that, you could, if it does show strength, it could lead into or bleed into strength within the S&P 500 or the Nasdaq. But oftentimes it is technology that will be the first out of the gates if the economy starts to show strength. I wanted to go into our sector grid too, as I just mentioned. I'm going to go ahead and just detach this and get it full screen for you all. Before I do that, though, if anybody would like this. Oh, there it is. Let me just see. Where do I click? Okay. Oh, I got to share it down here. I'm just going to make sure I can share the grid if, in fact, you want to look at all the sectors. These are all 11 S&P 500 sectors, and there it is right now into the chat box. So you've got it there. You can copy that and use it. It is a grid, so it would show up over here. Once you copy that, rename it. You could label that as a grid and put it over there too. But I find it quite helpful to look at all 11, and it has been helpful for the number of classes that I do teach and just what I look at. As well, you want to find out what sectors are moving up or moving down, just generally speaking. It's a tool that I like to use for that reason. But coming over here and showing a few different points, the Infotech group actually has been really quite strong, and so too has communication services. And anytime you get kind of a stabilization in the market or the economy, you might get some spikes right there. I want to reference this for just a second as we focus in on, let's just say, for example, the last, let's say 10 days. So I'm going to use another tool and go back and forth between this chart, these charts, and a tool in the Market Watch tab, which is going to be right over here. By the way, that is not a ThinkScript. So just a heads up there. That is just a chart that I'd shared with you. Okay, so I'm going to go over here. I'm going to pull up the S&P 500. And what I want to do next is I want to click on this one out. Dinner spike. I'm going to go into the 5-day. I'm going to call it a 10-day. I'll show you what we're doing here. So here is our 5-day look at what's been happening. Actually, I wanted to look at the sector indices. So these were all of the graphs we're looking at, plus the S&P 500 index as well. For the last 5 days, the winner has been utilities, then industrials, and then information tech. So as we come back here and we look at our charts here, the strongest in that group has been utilities. Actually, you know what I could do? I could create a ThinkScript. This might be helpful, folks, for this class and others as well, that I could have the 10-day and the 5-day in here on each of these. I'm going to do that. So we'll have that next week. And so, and I can share that as well. And that way, when you see the charts, you can actually see what percentage move has it been doing relative to the others as well. Because that's a good clue into what's been moving. But in the meantime, what do we have? We've got, utilities, industrials, and information tech over the last 5 days showing the strength. Where is industrials? Right up here. Yeah, so a good bounce in industrials. Industrials looks like, and I'm going to do this to show you. Let's go full screen. Maximize sell. Do you see how we're getting that similar type inverted head and shoulders pattern? Perhaps. It might even be stronger, but it could still be it could still follow in that line. In fact, if we kind of just hold up here and flag, that could be interesting. So, wow, will that remain strong? Industrials. Think in terms of tariffs, why that would be the case, right? Bringing more manufacturing, industrial manufacturing back to the U.S. I know the auto industry, it should be really quite, could be getting stronger down the road as well. It could be with the tariff situation. So that's just another one kind of on the side, but there you go. Before we're done, I want to take a look at the whole range. So let's see what's the strongest over this entire time frame. Let's say, for example, over the last 10 days. And what I'm going to do is just come in here. I'm going to adjust this. I'll share this script with you too, so you have it. Let's just click on it. We'll adjust it. Instead of a 5-day, I'll rename it a 10. So it encapsulates the entire time frame. Here is our 10-day look back right here. 10 and 10. Click OK. I'm actually going to share it as well. This is the ThinkScript, and ThinkScripts are not guaranteed for timeliness or accuracy, but I will say, as long as the data that's being fed into the platform is correct, then it should unfold, correctly. But let's see, I'll just paste this in right now, and make a quick note. Okay. All right, but that is this script right here. So I wanted to really highlight what's been the strongest over the 10-day period. So really kind of the big push of the move. And we saw some of this happening with, coming up with the NASDAQ. It's up almost 8%, information technology, and then industrials right behind it. But this can be really, really helpful to kind of take a look at. Energy is the one that's lagging, as well as healthcare. But these three, sometimes, not every time, okay? But over the last 10 days, I'm just going to grab, let's just say these top 4 right here. Consumer discretionary, communication services, industrials, and info tech. Sometimes if that really kind of represents the swing trade of the move, right? We had kind of this pullback and we ran up here. Sometimes when that move is the strongest within this group, what you might find is that you get a follow through too that's also strong. That doesn't have to happen, but I'm just looking and saying if the 10 days here are strong, well, the next 10 days or 20 days, the next run, 10 to 20 days or whatever, could also be the strongest too. And we're seeing a very, very mild, super mild pullback right now on the NDX. So will that start to take off? If so, hey, we might have that. There could be an inverted head and shoulders pattern that could be in play. Now, what we've done before too, what's really been leading the information technology group? There have been some that have gapped higher, and those might have already priced in a big portion of the move, but maybe some of them haven't. So to find out what's really within information technology, we can go over here to really just the scan tab, and we can scan just right in. Okay, so scan tab, stock hacker, and then scan in the S&P 500 industry. Let's just take a look at information tech right there, everything, because we want to see what stocks were making up this leader over the past 2 weeks. These are calendar days. So if I go into the scan tab here, I'm just going to information technology. I'm going to click on scan. We have, I'm in the wrong group. I'm sorry about that. I did that totally wrong. Sorry. You got to go in here, S&P 500, and then intersect with, see, that was the entire industry, but not the S&P 500 industry, information technology in the S&P 500. Now we've got it. That's more like it. So we're looking at 50 out of the 69 that are within that group right now. In fact, let's go to 200 so we can get them all on one screen. Here is the percent change. Now, I'm going to pull up over here the same exact 10-day. Boom, right there. I'm going to sort it. And now I can see what's really been moving in that technology, because you can see, yeah, we have some in there. They're really pushing the group up. Seagate Technology. What sub-industry? We know what sector it is. It's information tech. But what one has been moving here? Okay. The top ones we can see right here are the storage companies. Western Digital, Seagate, and then you're going to get into some software, system software. There's a few of those in there. Application software. Quite a bit of software, actually. Internet service and infrastructure, you can see up top. Let's look at a couple of these right now. ANET is communication services. So let's look at the top 2. STX. Okay, there you go. So this is actually, yeah, breaking above the prior highs right now. Really interesting. You might have a measurement gap here. Sometimes you'll take this range off a measurement gap from this low to this high and measured from that same level, duplicate, we'll pull it up. I just happened to spot this. I don't know if that'll end up being the target, but that is your measurement gap range. Kind of one of the old school patterns. Kind of puts us back towards the top of the channel, doesn't it? We'll see what happens. Really hasn't had much of a consolidation yet to this point. ANET was the other one just to look at right now. Okay, so a really big spike here, but yeah, did get past earnings. That's a question. Maybe that could be an inverted head and shoulders pattern as well. We shall see. Okay, interesting point, Chris, there. And yeah, I'll have to take a look at that. See, wouldn't industrial sector increase because of spending on aerospace and defense? Yes, absolutely. Yeah, it definitely could, because that's like one of the true defense areas. As a matter of fact, to your point there, I believe there's a quick way to find this too. Just go under, even a scan tab, just go under industry here, industrials. Don't we have a, let's see, we have, let's see. I think it might, oh, aerospace and defense, very top of the list. If I would just look there, it's right there. Yep. So good catch. It's in that group. Okay. So just a quick note, I wanted to show you how you can do that and see where the strength is coming in at. But one quick note is we just go back to our sectors as well and look at this. I wanted to show you that you can see that clearly many of these are lower lows and lower highs. Energy has really been dropping a lot. And as you can see over here, utilities has broken above a range. So you're seeing some strength there. Consumer staples, also kind of defensive, not the same kind of defense as, aerospace, but you can see up top here, really just holding flat. Could that be positioned for a breakout? And then finally, yeah, industrials too, right there. As we looked at this short term, maybe a little bit of a bull flag there, possibility of a breakout. So those are a few to keep an eye on. There's 3 right there. Always keep an eye on the tech though, infotech, if the economy does bounce and show some strength. Okay. All right. Oh, good catch, Beth. Yeah. So those long-term moving averages are really, really helpful. I saw one of those on Disney as well, but of course Disney jumped way above that 200-day moving average as well. Let's go back and take a look now at just some of our regular discussions that we have each and every week in terms of our market review. Okay, we can see up top here, our McClellan has not gone below that -70. It is holding strong, and all else equal, that is bullish. We talked about this way down here as a potential bounce for 2 to 3 weeks. It didn't disappoint. It went up over that time frame, generally is that time frame. And also with that spike in the McClellan oscillator itself, had a bigger impact on the longer term McClellan summation index, and that is a positive. Sometimes those can represent larger term changes when you can see that spiking higher and maybe even getting above or getting close to prior highs. Okay. Now, as we're looking at the advanced decline line, holding very, very strong here. We talked about market breadth. And with market breadth, if we were to break out above, if this advanced decline line gives us a sign of an early breakout where prices are not breaking out, this can happen. And when it is, there can be a lot of force behind it, because what you're seeing is not just maybe some of the bigger names, but larger baskets of stocks that are seeing purchases coming in. And what that can do is really, it can be an early indicator for a bounce in the market. Of course, nothing's guaranteed. Nothing has to be 100% in that sense. Now, in terms of the breadth of the market, one thing we can do too is just look at a market breadth of the S&P 500 and some comparisons here as well as we go through here. Okay, so what I'm looking at is a little bit different indication. So S&P 500 index. And some notes that are listed here. We've got line comparisons. This is above the 200-day moving average. This is the symbol for the 200-day, the dollar sign. SPXA 200. You got the 50-day moving average in here as well. You've got let's see. This is the NYSE new yearly highs and new yearly lows. Okay, so what are we going to be seeing here? A lot of times, if the trend is going to continue to the upside, we're going to be seeing some of these highs starting to break above prior levels too. So just kind of an interesting one. I picked this up from Kevin Horner, that I think we can use in our class going forward, just to kind of see the visuals here. But back to our market and sector review for now. Okay, more actually insights on breadth here too. So here is the SPX EW. Breadth was really bad when we began to dip here in April. When those reciprocal tariffs were announced, that's what you're seeing right there, the big 3 soldiers down. 1, 2, 3 before you bottom. That is actually a candlestick pattern. A lot of times you get 3 soldiers up or 3 soldiers down in a reversal. That one didn't disappoint. We hit right there before we began to trend back up. Now the thing here is we're quite a ways away from this prior high. So if this can kind of hold, if the SPX EW, where everything's equal weighted, can kind of hold maybe near prior support levels, clearly one we can keep an eye on as well. Again, though, a breadth type indicator. Okay, let's look at a 5-year. One of the key points here that we always tend to make on this particular deck, or this visual, is the tendency for the Oman spikes at the bottom to really pick up when you're getting a lower high and breaking down right there. Let's clear it off so you can see it. It was right in here. This spike right there, mainly just the spike to the upside. If you get these Oman spikes representing 52-week new lows, a number of 52-week new lows, quite a few versus 52-week highs, kind of an issue, creating an issue in the market in terms of a potential chasm, because you're getting half the market breaking down, the other one breaking up. But if it's happening when you're getting a lower low and a lower high on the market, there can be some real risk in that. We have not yet got it. In fact, we've been totally clear all the way to this point over here that where we're at right now. So no Oman spikes, and that all else equal, folks, is a very, very positive sign, because generally when you do get those Oman spikes and you start to get a lower low and the possibility of a lower high, you can really see it sink down here, which is exactly what we got down here. Okay, and this went on for quite a while. Okay, that's 1 quarter, that's 2 quarters. So that's a 6-month move right there from that point to the downside. I mean, a portion of it did jump back up, but it continued on down. So that's why we like to look at this screen here specifically. But we use this on a weekly chart. I'm using a 5-year weekly. It's a good reference. You can go back and see a number of these points occur in the past. And it's really just not one Oman spike. It's kind of a confluence of Oman spikes that you get kind of week to week to week, or a number of 52-week new lows occurring in the market. I sent out a tweet yesterday just looking at new highs in the market this week. There were 3 stocks that hit new highs, so not a ton of new highs in the S&P 500 right now, which is not too surprising because we did have this rather large pullback right here too. Okay, let's continue on. All right, so here is, okay, so just a little bit of movement off the bottom. Now we're going to be taking a look at some of the NYSE new highs on the year. We had 57 right now, NYSE. So this is a bigger basket of stocks, about 2.7 thousand, 2,700 companies, about 57 hitting highs, annual highs, 52-week new highs right now, right? And if we begin to get in the market higher highs and higher lows is what we're looking for here. What we want to see is actually these highs start to get back up to that 250 level. If you can get to the 250 and hold that, notice the spikes occurring above 250, they coincide very, very, very nicely with higher highs and higher lows on the market. The market here denoted in that kind of purplish color in terms of the NYSE. So that's the NYSE right here, NYSE in purple. But as we've been seeing from the past, getting above that 250 can be very, very important to do. Okay, we did make a new low. We actually had one company out of the 2,700 make a new high there. So really big dip, but yeah, we're making our way back, but still quite a ways to go if we begin to start to make higher highs and higher lows. A lot of times you need a fair number of companies that are really making higher highs and higher lows in order for the market in terms of the NYSE to also make higher highs and higher lows, at least for 2024. That was about 250 stocks. Okay. So we'll keep a watch on this each and every week, but that's simple if you ever want to look at it. Just $, I'll chat it out here right now. There you go. $NYHGH. Hello to you, Wiley. Great to have you on board, as well as others that have joined us here. That's it right there. So some interesting points coming up. Maybe we out of the Hindenburg. Oh, and yeah. So exactly. That's the key thing. If it pulls back now and there are no omen spikes over there, kind of to Riceberg's point, that's what the omen indicator's telling us, right? We have to kind of combine that with everything else we're looking at, but that's what it's telling us. Now, before I go into the other indications, I want to just jump back here. Since we kind of looked at a weekly chart, I want to look at another weekly chart and then a monthly chart. I just want to see how we're doing relative to those really long-term moving averages. Okay, here is the S&P 500 index. Let's go ahead and throw in like a simple period moving average. And I'm looking at a 50 period moving average on the weekly. Where does the 50 weekly stand? Then we're going to look at actually a 13 on the monthly. Okay, so we're right there. Now, that can be a really interesting indication too. It's sort of a way to broaden out that 13 period monthly moving average that we talk about from time to time in this class, that has helped to spot a number of longer term bull and bear markets that will run up or down for a few years. But notice we're right at that point. Gosh, it's so interesting. The 50 is literally right at that resistance level. You got to say, in some cases, the market tries to give you enough information if you're willing to look for it, right? There's a lot there. That's at the 61.8 fib. There's a lot of tendency in terms of support or resistance right there. And what were we saying? That on the daily chart, this is like a inverted head and shoulders neckline. So getting above that could be really quite powerful. It could be, it doesn't have to be, but like I said, there are a few different indicators that are kind of anchoring this for us. I'm going to go ahead and throw on now. In fact, I want to save this. This should have always been saved. So I'm just going to save grid as and save. Okay, and we're going to do our monthly. We're going to save this as well. 13 period moving average. We'll go ahead and bump this up as well to a, let's see, let's go to a max. And we'll go ahead and click on it so we can see it first. But there we have it. Look where we stand there. Remember, this was the one that had been mentioned about by individuals way back in the 1930s and 40s and 50s. The one I was looking at, I think it was like late 50s. One of an individual, the owner of a large brokerage firm, whose name you'd recognize. I just don't want to mention it, but still around to this day. But I'm just saying they were using a longer term moving average, and a lot of studies were made after this individual had talked about it in terms of just longer term bull and bear markets holding, once you get above that 13 period moving average, monthly moving average, a lot of times you might get bigger moves. Look at this. It came right down and bounced right off it. That's just in 2023. Folks, where are we at right now? Do you see how that ties in? It's a more minute way to look at the weekly moving average. I'm really going to zoom in now so you can see it. Although you don't see it, there is a potential inverted head and shoulders pattern there. And although you don't see it, there is the 61.8. Well, you do see that. Fibonacci as well as the 5660. They all coincide around a very fascinating area right there. It's very, very interesting. It's resistance if you're below it. It's currently resistance. But, positive tariffs or whatever, maybe if it's newsworthy enough, there's something in the economy that gets us going higher, whatever the case is, or not. But there it stands. By the way, look at that candle. That is some kind of a candle. I'm going to take this off. Another one. Remove this. I just want to see it. That is some kind of a hammer, a monthly chart. That was the end. That's what April looked like. Wow. So a lot of selling activity there. for those people that I guess did have longer term positions and hold on to it, it bounced all the way back again. That came right off of the Fibonacci 50 and 61.8. That lower test level is exactly where it hit. That fib again was drawn off two different points, this low here and this high here. And this low here, which started the next major move up, and again, this high here, you got a 50 and a 61.8, and boom, it's set up right on that prior high as well. Kind of anchored really nicely, or very close to it. Okay, so that's a decent overview of a few things I wanted to show you guys too before we're done. In fact, I wasn't quite done with this. I jumped over when we went on the longer term chart, but one last couple of views to take a look at. Here is the seasonality chart, and I don't know if we'll kick back into seasonality, but historically, on average, this is what the markets do from January to December. We dip below it. Obviously, this is all tariff related. There's no doubt in my mind. Tariff, I mean, that's obviously the case because a lot of the sell-offs within the market, and you got these lower lows and lower highs. So a massive influence, I'll just say that, on the price of the S&P 500 index. But notice over here, higher highs and higher lows. If you start to map out kind of higher highs and higher lows, it might not look exactly the same, but they could give interesting reversal points, tops or bottoms. Okay. All right. And lastly, I did want to pull up, since we did read through it already, but oh, let's see if I've got it here. I had it. Yes, I did. For you guys. And that is the stacks. So the Schwab Trading Activity Index came out. You can see over here that in terms of what we saw in terms of the market, there was a big dip right there, lower lows and lower highs right there, and actually broke through some lower levels. So we just didn't see as much participation after 2022. I think that's a key point within the markets. The stacks is just way off. We had a lot of participation 2019, but 2020, you can see really after 2020, that dip, a lot of people just stayed out of the market, I believe. It looks like, according to the stacks, in terms of what we're tracking here. We read this disclosure initially, but more information on the stacks listed down below. I think it can be an interesting indicator to keep eyes on. But about the stacks at the bottom, what I'll do is I will just copy this link and send it over in the chat, folks, so you have it. Folks, if you did find today's presentation helpful, please smash that like button. Helps us get the word out, and subscribe as well. Yeah, if you could subscribe, yeah, bottom right-hand corner of the screen. Again, you've got Ben and I's information in terms of our X handles. We like to post information on there that we find that you guys might, think could be useful. We post fundamental information as well as technical information along with it. But did provide that link if you wanted to take a look at that link for the FOMC news meeting. That too is also on the X handle as well, in case you're interested. Tried to keep you guys up to date because it was one of those big days. So a few of the links are on there, as well as the CMA watch list, Fed watch list probabilities. All right, everybody. Well, on that note, thank you so much, Ben, for all your help as always. Great to have you all on board, folks. I really appreciate the back and forth. I'm going to go back and read through much of this material, questions, some comments that came out. Hope you have a great rest of the day, and we'll see you next time all.